On the call this morning, U.S. and overseas markets gained nearly 1% in early trading as China's inflation figures point to the possibility of a soft landing, overshadowing an increase in reserve requirements for Chinese banks. European stocks also rallied despite an S&P downgrade of Greek debt by 3 levels to CCC, the world's lowest rating. Can U.S. retail numbers extend today's rally? I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Happy Tuesday, Scott. Let's get right to it with the S&P not hitting the 200-day, but we did have the Russell and the Nasdaq did. Where do we go from here? What does that mean for people out there?
Well, yesterday was a small technical bottom. We thought that we would test the 200-day. We tested it on the Qs. We tested on the Russell. They've been accelerating lower quicker. The spiders or the S&Ps didn't quite get there, but it was worthy of a look. I want to show you quickly the chart of the Qs, which actually did hit the 200-day yesterday. This was your top level that broke down. This is when it retested and broke support, and we held the 200 days. So we could get a small bounce in the Qs back up to this just say 55.76 area. And before we get to the S&Ps, I want to show you the Russell also. It actually did the same type of pattern where it actually almost came down to the 200-day and is bouncing a bit after a really big technical breakdown when it broke through this support at 820.
Well, let's go to the spiders real quick because I have a question about bounces and how to play them before we get to that.
Okay, let's take a quick look at the spiders. What's your question there, Alex?
My question is, so on a day like today where we have the futures up and we're seeing a bounce, do you need to short those? Do you need to sell into them? What's that strategy?
Well, it's a little difficult because we've seen a lot of gap ups lately. We've been seeing a lot of futures up and we haven't been able to hold.
Right.
We need to be from a lower level or a low enough area that interest will still come after a gap up. I think we might be there. Now, as far as the entry yesterday, we talked about the red dog reversal. We didn't quite get to the 200-day, so we had to rely on a strategy, and that's when this happens. That's when, I'll make it a little bit bigger so you could see. That's when you break through the prior low, and this low here was 127.26, make a new low of 127.05, come back above. You're buying there with a stop here, so that's why on my virtual trade floor, you see I'm long the spiders. Now, as far as the bounce, I'm not sure where it can go. I'll map out right here about 129 and then 130. I do think a bounce could be shortable. It might not be today. It might be in a few days when the bears have to show their mettle, and that's probably around 129, 130 on the SPYs, and that's probably around 1295 in the S&Ps if we can get there.
So if you are along the spiders now and we do get that bounce, would you be sort of lightly selling into that strength, or you just want to wait and see?
Yes, I would probably, I'm going to be selling to the strength. I'm going to see actually if I can add today. Okay. You know, the S&Ps are opening up 8 handles. What I would look for in the first hour if we hold up and you see participation with the leaders, you see some banks still strong, you see some participation with some volume, then maybe I'll add to the spiders on the gap open and actually get rewarded because every time any trader has not been in the gap up and they buy after the gap up, they lose money because we don't see higher prices, and that's very bearish action.
And then really fast, the two pieces of news we're watching today is the inflation reading out of China, which was hotter than expected but not terrible, which I think was helping markets, and also maybe the idea that they will stop massive tightening. We saw one more reserve requirement hike, but maybe no more interest rate hikes, and also the downgrade of Greece. Do traders care about those two things, those two fundamental stories?
Well, there's a lot to look at there. I don't think traders are really dissecting it. I saw when the banks raised their reserve requirement, I'm like, wait, that's good news considering when we lowered ours, our banks rallied. So I think they're just looking for an excuse for an oversold bounce. And since we have quadruple witching on Friday, the trend has been down. A lot of people have been buying protective puts. So I just think we're getting an oversold move into Friday, no matter what the headlines are.
Right.
I would have rather some crazy headlines because we wanted that capitulation scenario, which we didn't have. So I do think they might try and keep this up to get some of those puts to go worthless so everyone doesn't